Hi everyone! Welcome back to our channel, where we break down complex insurance topics into easy-to-understand lessons. Today, we're diving into the NAIC Model Uniform Health Insurance Policy provisions. If you're studying for your insurance license or just curious about how health insurance policies work, this video is for you. By the end, you'll understand the 12 mandatory and 11 optional provisions that shape health insurance contracts. Let's get started. What is the NAIC Model Uniform Health Insurance Policy provisions? The National Association of Insurance Commissioners, NAIC, developed the Uniform Individual Accident and Sickness Policy Provisions Law to standardize health insurance policies across the U.S. Almost all states have adopted this model law or something very similar. The purpose of this law is to establish uniform terms, provisions, and wording standards for all individual health insurance contracts. This ensures consistency and fairness for policyholders. The NAIC model includes 12 mandatory provisions that protect policyholders and 11 optional provisions that protect insurers. These provisions use uniform language, meaning insurers must use the same wording unless they get approval from state regulators to use alternative language that is no less favorable to the insured. The 12 mandatory provisions. These 12 provisions are required in every individual health insurance policy. They protect the insured's interests and apply to all types of accident and health insurance policies. Let's go through each one. 1. Entire Contract Clause. This clause defines the entire contract as consisting of the policy form, the insured's application, and any attached papers. It protects the policyholder in the following ways. Nothing outside the contract, application, policy, riders, or endorsements can be considered part of the contract. The insurer cannot change the policy without the insured's written consent. Any changes must be approved by an executive officer and endorsed onto the policy. Example: if you sign up for a policy and the insurer tries to add new terms later, they can't do it unless you agree in writing. 2. Time limit on certain defenses. Incontestability. After a policy has been in force for a certain period, usually 2 to 3 years, the insurer cannot deny a claim based on errors in the application unless there was fraud. Example: if you accidentally misstated your age, the insurer can't deny your claim after the incontestability period ends. 3. Grace period. This gives the policyholder extra time to pay the premium without losing coverage. The grace period depends on the payment frequency. Days for weekly premiums, 10 days for monthly premiums, be touted to 31 days for other payment frequencies. Example: if you miss a payment, you have 10 days to pay before your policy lapses. 4. Reinstatement. If a policy lapses, the policyholder can reinstate it within 60 days by paying the overdue premium. Reinstatement is automatic if the insurer accepts the payment without requiring a new application. Example: if you lose your job and can't pay your premium, you can reinstate your policy once you're back on your feet. 5. Notice of claim. The policyholder must notify the insurer of a claim within 20 days of a loss or as soon as reasonably possible. For long-term disability claims, updates may be required every 6 months. Example: if you're injured, you have 20 days to inform your insurer. 6. Claim forms. Proof of loss form provision. The insurer must provide claim forms within 15 days of receiving notice. If they don't, the insured can submit proof of loss in any format. Example: if you're hospitalized, the insurer must send you the forms quickly so you can file your claim. 7. Proof of loss. The insured must submit proof of loss, e.g. medical bills, within 90 days. If unable, they have up to 1 year to provide proof. Example: if you're recovering from surgery, you have 90 days to send in your hospital bills. 8. Time. Payment of claims. The insurer must pay claims immediately after receiving proof of loss. For disability claims, payments must be made monthly. Example: if you're disabled, you'll receive monthly payments to cover your income loss. 9. Payment of claims. Benefits are paid to the insured or directly to a healthcare provider. If there's a death benefit, it goes to the named beneficiary or the insured's estate. Example: if you pass away, your beneficiary receives the death benefit. 10. Physical exam and autopsy. The insurer can require a physical exam or autopsy at their expense before paying a claim. Example: if you file a large claim, the insurer may ask for a medical exam to verify the loss. 11. Legal actions. The insured cannot sue the insurer until 60 days after submitting proof of loss. Most states allow lawsuits within 3 years of the loss. Example: if your claim is denied, you must wait 60 days before taking legal action. 12. Change of beneficiary. The insured can change the beneficiary at any time unless the designation is irrevocable. Example: if you get divorced, you can update your beneficiary to your new spouse. The 11 optional provisions. These provisions protect the insurer and are only included if the insurer chooses. Let's go through each one. 1. Change of occupation. If the insured changes jobs, the insurer can adjust premiums or benefits based on the new risk level. Example: if you switch from a desk job to a dangerous job, your benefits may decrease. 2. Misstatement of age. If the insured misstates their age, the insurer can adjust benefits or premiums. Example: if you say you're 25 but you're actually 30, your benefits may be reduced. 3. Other insurance with this insurer. If the insured has multiple policies with the same insurer, only the maximum benefit from one policy is payable. Example: if you have 2 disability policies, you can't double dip. 4. Insurance with other insurers. Expense incurred basis. Shares responsibility for claims if the insured has duplicate coverage with another insurer. Example: if you have 2 medical expense policies, each insurer pays a proportionate share of the claim. 5. Insurance with other insurers, other than expense incurred basis. Applies to indemnity policies, e.g. on disability insurance, and allows pro rata benefit payments if the insured has other coverage. Example: if you have 2 disability policies, the insurers will pay benefits proportionately. 6. Relation of earnings to insurance. Average earnings clause. Prevents overinsurance by limiting benefits to the insured's actual income. Example: if you earn $5,000 a month, your disability benefits can't exceed that amount. 7. Unpaid premiums. Allows the insurer to deduct unpaid premiums from claim payouts. Example: if you miss a payment, the insurer can take it out of your claim payout. 8. Cancellation. Allows the insurer to cancel the policy with 5 days written notice, rarely used today. Example: if the insurer cancels your policy, they must refund any unearned premiums. 9. Conformity with state statutes. Codifies the policy to comply with state laws. Example: if state law changes, the policy will automatically adjust to meet the new requirements. 10. Illegal occupation. Denies claims if the insured is injured while committing an illegal act or engaging in a felonious occupation. Example: if you're injured while robbing a bank, the insurer can deny your claim. 11. Intoxicants and narcotics. Relieves the insurer of liability if the insured was under the influence of non-prescribed drugs or alcohol when the loss occurred. Example: if you're injured while drunk driving, the insurer may deny your claim. And that's it! The NAIC Model Uniform Health Insurance Policy provisions ensure fairness and consistency in health insurance contracts. Remember, the 12 mandatory provisions protect you, while the 11 optional provisions protect the insurer. If you're studying for your insurance exam, make sure to memorize these provisions and understand how they apply in real-life scenarios. If you found this video helpful, give it a thumbs up, subscribe to our channel, and hit the bell icon for more insurance tips. Thanks for watching and see you next time.